all of the panelists. Moving on to our next session now. For FinTech policy to succeed, there needs to be close collaboration with our public markets. So for our next panel, we're asking, what are the trends and instruments reshaping the future of FinTech investment to enable new opportunities for both investors and innovators? And to discuss all of that, we'll be hearing from leaders of the British Business Bank, the London Stock Exchange Group, and FTSE 100 insurance provider Phoenix Group. So joining us now with his panel, please welcome Stephen Fine, the CEO of Peel Hunt.
Good morning, everybody. Thank you very much. I'm hopeful this will be a very illuminating and enjoyable session on capital formation. Delighted to be joined here by a fantastic panel. I do feel rather humble just to be Stephen Fine because we have Dame Julia Hoggett, we have Sir Nicholas Lyons and Louis Taylor CBE. Maybe this is a stepping stone, who knows? But thank you all for being here. Now, obviously, capital and capital formation and capital supply has been challenged significantly recently. We've seen an excess of funds from the UK markets. We've seen significant growth in the US. We've seen demand for public companies to list overseas. And an awful lot has been done or is being done to try and reverse those trends and certainly bring the UK back to the stage it really should take in that whole process of the capital cycle, from seed to venture to Series A, B, C to pre-IPO and indeed IPO. But really, if I start with private capital, we had the Mansion House Compact that you were the architect of, Nick. And obviously that was 5% of assets into unlisted equities by 2030. The concern is that will all be done in November 2029 because we see so far the take-up has been quite slow. But I also note in today's Financial Times an article talking a little bit more about Mansion House Compact 2. But I wonder if you might comment on where we stand now with the Mansion House Compact.
Yeah, thanks very much indeed for that. And I think it's important just to contextualize what we were trying to accomplish with the Mansion House Compact in July of 2023 with the then Chancellor Jeremy Hunt. From a pensions perspective, you have to recognize that we have to put pension savers absolutely at the top of our list of priorities. The government looks at almost £4 trillion in the pension ecosystem and another 1.5 to 2 trillion in retail savings, and sees, huge potential pots for stimulating the growth and investment that they're looking to encourage. Those are not mutually exclusive, but you have to look at the crossover in the Venn diagram to work out where the opportunities are going to arise. Mansion House Compact was designed to get the private sector in DC pensions. We call them pensions. They're not, of course, pensions. They're just investment pots. But the reason that we went for DC was because they are investment pots. There are no guaranteed liabilities that have to be met. The issues around liquidity, therefore, are much more minimal. And therefore, it lends itself as an investment savings scheme to long-term illiquid investment. And yet we have virtually none in the UK. For me, I've always been excited by our technology, our entrepreneurs, our life sciences, and it was very clear that we were hopelessly, and still are hopelessly, dependent on international capital to support our great, small and growing businesses. And I wanted to start a process of a discussion, a national discussion, about how we can look at that whole pension piece, closed DB, open DB, local government pension schemes, DC, SIPs, and have a sensible conversation about how we can channel more money into at the early stage economy and private assets. And the reason for that was not just because it's good for the economy, it's because it's good for pension savers. It diversifies risk alongside corporate bonds and listed equities and gilts. So the Mansion House Compact was modest in its intentions. When you try and get 11 of the largest players in a market like DC to come together and agree on anything, you're going to have to compromise. And the compromise was that we pushed the deadline back to 2030. We didn't make it compulsory. We didn't specify that a certain amount of that investment had to be in the UK. But it was 5% of default funds into unlisted equities. And you know, we're at way less than 1% at this stage. You talked, Stephen, about the FT article in the papers today that suggests there's going to be an announcement on May the 6th. I can't really comment on that because I work very closely with the Lord Mayor, and obviously Phoenix was a signatory to the Mansion House Compact. But my experience is that when the FT gets hold of an article within a week of a potential announcement, it tends to be quite accurate. I'll say no more than that, but I would refer you to that article. But I would say that I absolutely feel, because I have met so many entrepreneurs in the last 2 years since we put Mansion House Compact in place, who said, that's great, we love what you've done, but when are we going to see the money? I won the argument about the what when we had that discussion with the Chancellor around the Mansion House Compact, getting 5% into unlisted equities, but I lost the discussion, the battle about the how. My intention was that the private sector should put together what I called a future growth fund that all of those 11 players could contribute to. So we would immediately have scale, because with scale comes skill, and with scale also comes diversification of risk. But that was shot down by some of the very big companies that already have their own asset management capabilities. And that's why we are in the situation that I predicted, which is that some will take their commitments very seriously and move swiftly ahead. Phoenix, the company that I chair, teamed up with Schroders. We've put together Future Growth Capital. We've pledged to put £2.5 billion into that in the first 3 years, and Schroders to try and match that. That will be a substantial amount of money. And of course, you should only be raising the money and putting the money to work as and when you can find the good opportunities to do so. But, you know, I really do commend what's happening around British Business Bank and what was British Patient Capital and the new fund, because that is where the scale and the skill will reside, and the private sector needs to respond and match that.
And that's a wonderful lead into Louis. I think we'll come on to Pisces in a moment, but I think the fact that with the Mansion House Compact, something was done that hadn't been done before, albeit not exactly what you wanted, at least something has been done, it then settles, people get used to it, and you can then build upon it. But Louis, to pick up on Nick's comment, the new fund, how do you feel about that?
Well, I think I agree with so much of what Nick said, in fact, all of it. I'm a little bit more optimistic about the money flowing. Whilst we haven't particularly seen it happen, there's been a lot of work going on to set up LTAFs and other structures that allow this investment to be undertaken by institutions in relation particularly to pension money. And actually the bank established something called LIFTS, the Long-Term Investment for Technology and Science, investing in later stage companies in the UK, tech and science led, in partnership with Future Growth Capital. So Schroders, the fund manager, Phoenix putting 250 million, 10% of your £2.5 billion commitment, and the British Business Bank matching that, with the intention of leveraging that up with other pension money to potentially £1 billion of money going into earlier stage tech and science led UK companies. And then additionally, what we're really engaged on now is to create our own conduit for pension funds to be able to invest in the growth economy, those later stage scale-up companies. And we're very close to regulatory approval and opening the data room to create a fund for pension funds to be investing in Series C plus companies that have been curated from the funds that we've been investing in for the last 5 or 7 years. So we can see the great companies coming through. We're in 44 fund managers, 85 funds, 1,400 underlying growth companies. And we know the ones that are going well. We know the ones that are good, and when they need big amounts of money, we're willing to put money behind that and invest at several stages. And that's coming quite soon. So we hope that that will be investing before the end of the year. But it's a tricky fundraising environment. Somebody mentioned the uncertainty word earlier on as well, but we're pretty confident that we will get a vehicle going which will catalyse other vehicles from the private sector as well, because it's not the case that the government should be doing everything in this space.
That's fantastic, and I think backed by the British Business Bank, will expand you from 3 Bs to 5 Bs, is sort of a wonderful acronym. So that's private capital, and of course there's now the crossover to bridging private to public. And I think, Julia, obviously Pisces is a significant initiative, and we know it's working its way through the FCA, but perhaps you can just shed a little bit more light on how that's going right now.
Yeah, thank you. I was actually reflecting that I've come and spoken at this conference every year since I've been CEO of the exchange. And when I first spoke, it was the idea of Pisces. In fact, it wasn't even called Pisces at the time. And to get to a point where we're now waiting for the sandbox to go live in July, Chancellor has committed to laying the relevant legislation in May. We're actually having a launch event for companies and investors, a lot of whom are the Mansion House Compact investors, at the end of June. And that's an illustration of the momentum behind it, that the market cap of the companies that are currently committed to attend is something in the region of 180 to 200 billion. So that illustrates the scale that we're seeing in terms of the focus on this. And I think I was reflecting on the panel that came before, aside from quite how many shout-outs Louis got.
I'm taking up residence in the front row.
I was going to say, he can, but it's an illustration actually of how joined up this has all become. When Nick and I sat in the first Capital Markets Industry Task Force meeting and started talking about the pension agenda, a lot of these things weren't being talked about. You know, there wasn't a Mansion House Compact. There wasn't a Minister for Pensions doing the reviews. There wasn't the level of scale and conversation about the role of the BBB and really boosting the scale of the BBB and its capacity to direct capital. And the fact that the UK wasn't providing the structural and domestic investment in this space wasn't really as much of a conversation. Now we have a series of initiatives which are all coming together to genuinely direct capital in. Now, there'll always be a frustration about the pace and speed of any of these things. But actually, I used to be a regulator, so I can say this is remarkably fast to come up with a brand new market. And so Pisces, which stands for the Private Intermittent Securities and Capital Exchange System Regulation, where the R is silent, is an illustration really of the UK thinking very differently from a regulatory point of view, which is, let's stop saying this is how we've always done it, and let's look at the absolute problem and the challenge, and then come up with a solution to it. Mansion House reflects that, what the BBB is doing reflects that, LTAF's lifts reflects that. We do create acronym soup as a consequence of solving problems, but if that's our worst challenge, then I think it's a good one. But fundamentally, it's the ability for private companies to have a liquidity event in their secondary shares at a periodicity of their choosing, but with a disclosure regime that is standardized, understood, doesn't carry the level of challenge that meeting MAR and the public market disclosure is. It's very much private market up rather than public market down, and gives people a level of control over those liquidity events that doesn't happen when you get to the public markets. And it's fundamentally the ability to enable exactly the Mansion House Compact companies to have access to private companies in the size tickets and the liquidity that they want, and using the kind of pipes and plumbing that they already use, to give angel and seed investors a transparent price formation process to get out and get back to being angel and seed, to give companies the ability to actually move through the gears of the VCs and the Ps who are backing them. If the next ticket you need to have written is a 100 million ticket, but who's on your cap table can only write 50 million tickets or 5 million tickets, you need to be able to move through those gears. And also critically to provide liquidity for staff, so that actually you get the ability to retain talent and be able to reward them. And this is not designed to be an idea of kind of the sausage machine as it is in other jurisdictions for moving, essentially that you have to then think of that as the inexorable pull towards IPO. There are some companies who may choose to be Pisces companies forever and never actually choose to go public. But it's that opportunity to say, how do we create markets that enable companies to get access to liquidity and the investors to get access to the assets that they want? And the UK has taken a very innovative approach. I've seen that Europe have announced they're going to try and produce a version of Pisces by 2026, 27. I'm assuming that copying is the best form of flattery in that regard. But I think the UK has an opportunity to really prove that it's building markets to solve problems and meet needs of issuers. So it comes as no surprise, the LSE will be running a Pisces market, and we are doing everything we can to make sure we can have the first issuance up and running this year.
So watch this space. It's all very exciting. Now, we've covered private capital and we've covered the crossover bridging private to public, so I think we probably in the remaining few minutes should talk about public markets. And again, probably if I stay with you, Julia, CMIT and the five fingers of the glove, and we've only got a couple of minutes to talk about this, but clearly public markets have been very challenged recently, the exodus of funds. But what is CMIT doing now? We see listing regime rule changes, prospectus regime advice guidance all happening in the background. So maybe you can just talk us through where CMIT's going next.
So very quickly, the five fingers on the glove are capital raising rules, research availability, risk capital availability, corporate governance, stewardship and REM, private market ecosystem, which is predominantly Pisces, and the support for the Mansion House Compact. And the glove is the culture, how we talk about it around here, and how we celebrate entrepreneurship and, dare I say it, success. If you look at where we are in that agenda, the listing rule reforms have gone through, and the FCA is working on the prospectus reforms right now. I think Nikhil may have, to Nick's point about things being imminent and being in the FT, I think there was some reporting about the FCA's position on what they're going to be doing on the prospectus rules this weekend, which is incredibly positive and dynamic. There was the reference from Mike about the need to enfranchise retail and the ability to buy secondary offerings. I think that will come too. So we're getting towards a greater vision for retail enfranchisement in the UK. The research rules have already been changed. We have obviously the debate going on right now regarding pensions and ISAs, which I'll come back to. Corporate governance code's already been updated. The stewardship review is going on right now. And we are seeing, I think I saw an article recently that said that actually the relative rise in executive pay in the London market was actually at a higher rate than it was in the US market this year, which is an illustration of how much has changed. And then Pisces obviously is coming in July. So actually, I mean, remarkable progress considering how broad the agenda was. The key focus we have as CMIT is fundamentally an agenda that I've sort of termed turning the taps on, which is really focused on flows of capital and how we incentivize domestic flows of capital to really continue to invest in our market. Everything that's happening with the Mansion House Compact, everything that's happening with the BBB is an illustration of that, and obviously the ISA reform. But I think we're also looking more broadly at retail, what I describe as retail enfranchisement. How do we make it much more straightforward for retail to get access to the advice that they need in order to buy assets, to understand, as the previous panel said, that somebody taking their money, sticking it in a cash ISA and leaving it there indefinitely is not a pension plan. You know, we need to have a level of engagement, and we think of it as a sort of three-legged stool of, yes, financial literacy, but it's also access to advice and access to products in a straightforward fashion. And sometimes we've actually made it harder for people to access regulated productive assets than we have unregulated assets. This is exactly the audience, the room. It's full of people providing exactly those rails and those opportunities. And I think there is a genuine desire in the UK to really think about what that next leg of retail engagement is with our markets.
And we just haven't got enough time. It's just staggering. We could talk for hours. Just very, very quickly, Louis, British Business Bank, expanding the mandate, investing in AIM or public equities.
Well, look, I mean, the government supports small companies through grants from Innovate UK, through tax benefits through EIS, SEIS, and through investment from organisations like the British Business Bank. So we should want companies to stay in the UK and have the ability to get more capital as they need to grow. So huge interest in connecting the public markets to the private markets and having them all functioning as you'd like them to. I think the bank is a speculation that we're being asked to look at the public markets. I mean, I think I can see a way in which we could be involved in the public markets, but not in isolation of a broader range of reforms that fundamentally brings more buyers into the market, most particularly UK institutions, because I'm not being glib when I say our problem in the public markets is more sellers than buyers.
Well, look, we've covered private markets, the crossover markets, bridging private to public and public markets. It's quite exciting, as Julia listed, the sheer number of initiatives that are taking place, not just within CMIT, but more broadly to help revitalise public markets and the private markets and general capital formation. I hope we've covered a lot around the whole funding continuum, how that can work. Heaven knows if the Treasury decide, for example, particularly for a lot of the fintech entrepreneurs here, if they reintroduced entrepreneurs relief, but only if you IPO'd, that would make an awful lot of people in this room think very carefully about the next stage of their growth. But I'm also quite excited to see organisations like the Tony Blair Institute, the CBI, New Financial, McKinsey, as well as CMIT, etc., all very, very focused on this issue. So we do believe there's an enormous amount of activity taking place behind the scenes, and I do hope that does, to use Julia's words and Nick's words and Louis' words, open the floodgates for capital to come back to this market where it really needs to be. But one very quick last question. If there is a logjam on pension fund reform, to the three of you, would you mandate or not? Louis?
I think there are other ways of, other ways of incentivising than actual mandation, and I think that might go against the spirit of an open UK economy.
Yep.
I think we need to leave it to the private sector to try and make the right decisions around domestic buyers to equity capital, listed equity capital, but the government should always retain the threat of mandation to help concentrate their minds.
The last word?
I think Nick may have just summed it up.
I think he did. Well, thank you to the panel. Thank you all for listening, and enjoy the rest of the day.